Stocks rose Friday with the S&P 500 up by more than 3% and logging back-to-back gains in its first weekly advance since late May. The Dow rose by more than 800 points or 2.7%, while the Nasdaq increased by more than 3.3% with the tech share rebound. What was interesting was the major averages held on to these gains even after consumer sentiment was revised down to a fresh record low, as Americans continued to struggle with elevated inflation. But the big question is, did everything just flip from bearish to bullish? I doubt it. We've had deep oversold conditions and it was time for some relief. So how long will this dead cat continue to bounce? From what I gather, this rally will likely have some upside into July, but then we have another rate hike to entertain. In my opinion, we will likely remain in a funk until the Fed pivots and becomes more dovish. At that point, the markets will explode higher. Until then, we'll have to contend with the volatility. So, let's take a look at the charts. Today we're going to look at two charts, beginning here with the 2-year weekly chart on the VIX, the volatility index, and you can see the symbol is $VIX using stockcharts.com. Now, looking at the middle portion of the chart, you can see that this low here in early 2022 was the bottom, and we came down to this low here, which is higher. And then again, higher, and we're still higher here at 27.23. So these lows are moving on up. Now, if you look, you can see a horizontal line, imaginary, but somewhere around 34 to 36, we see this ceiling here. Each time the VIX does erupt, it seems to turn somewhere around this level here. However, the bottom once again continues to rise. So, as we move along sideways, the cycle is getting tighter and tighter and tighter, and when it gets real tight, it's going to pop, either up or down. My bet being that we have an upward move in this bottom trend line and a horizontal line on the ceiling, my bet is that it's going to pop up and through that ceiling. If that's true, then the market's going to head down. So keep a close eye on that. RSI and the MAC, not going to tell you too much except say the fast line is rolling over here. It's going to go through that slow line, but we're still above that zero line and there's still strength. Now, it'll come down here, perhaps bottom out very shallow, and then we're going to see what happens on the upside. So, stay tuned. Now, let's go to our charts. And our second chart here is the 2-year weekly chart on the spiders, the SPY, and the close on Friday was 390.08. I took the opportunity to put this channel in here with the lower trend line and the upper trend line using one of the features on the website. Now, I've had zero complaints for the times that I draw the channel lines. I wonder why, because they're terrible, but you get the idea. Now, we just went slightly through but bounced on up. We're right here. We're still below that midpoint, and we're still below the 20 and the 50 EMA as well as the top channel line. So it's going to take a lot of power to move up through all that flak. Do we have the power? Well, too early to tell. Here into volume, that's not showing much, but we are having a declining trend line for the most part, with the exception of that, but one line does not make a market. Here in the MAC, you can see that we're just barely making a move, perhaps a bottoming and basing and a move on up, but we've already had some failures right there and then right here. So could we have a third failure? Definitely. We'll just have to wait and see. Here in the histogram, we can see that the histogram is starting to roll over and head on up only barely. We need a few more weeks under our belt to see what really is happening. So again, that's an early one as well. I think you'll see these other oscillators are also very early with their bottoming and basing. Just have to wait and see. There, the RSI, we're still moderately weak at 40.48 under the 50 line, but it's trying to make some progress. Stochastics, once again, looks like an attempt at bottoming and basing, but I've been fooled before. Here in the Williams is still well below the 50 or negative 50 line, so I want to see this move on up above this negative 50 and continue on up to that negative 20 or that overbought territory. It's going to take some time to get up there. If it does, it's going to pull the other oscillators up, and hopefully the market will also head on up. But right now, I think a pretty decent trap could be set if we continue on up and we don't make it through, certainly the EMAs or the top trend line. And if we reflect and get rejected back, it could be punishing. So I'm still staying on the sidelines with my money. And for today, that's ChewDog Charts. Thank you.